build a super heavy lift vehicle that could be used for setting up a moon base or doing a Mars mission. That would be the holy grail objective.
There have been many attempts to build a reusable rocket system, but they have always been cancelled once they discovered that success was not one of the possible outcomes. But this is fundamentally something that has to be solved.
Yeah, I think it's super obvious that, ultimately at some point rate cuts are probably coming. If you just look at what happened in Europe, right? Europe is heading that direction, and I think ultimately that's what's going to happen. Timing is always uncertain, like with everything in the Fed, right? If we look back to 2020, they made a very strong stance that, if you remember, Powell was saying we're not even thinking about raising rates, and we now know where that ended, right? So I think the Fed is going to be the same thing. They're going to be saying that there are no changes in the horizon, that things are going to be stable, predictable, when we know, in fact, that's not the case. If there's one thing we know about monetary policy, is that it's not stable, it's not predictable. Let's put things in perspective. If we just look at the amount of Bitcoin that was accumulated in the ETFs, right? There's more than 1 million Bitcoin that are actually being bought by BlackRock, Fidelity, the major financial firms. So think about that. If we went a year ago and I told you we're going to have an ETF, not only we're going to have an ETF, but 5 months after the ETF is launched, we're going to have 1 million Bitcoin sitting at the ETFs on behalf of the clients from these institutions, people would think you'd be crazy, right? And the floodgates are open. That has been happening. It's by far the most successful launch of an ETF that we've ever seen. Just like if any new technology, right? In the beginning, we're all worried about it, but eventually, when you look at it and you really understand the value that it has, not only in an asset allocation perspective, as I said, but on a fundamental level, what this really represents as a savings technology to the world, then people really buy into the idea. And I'm starting to see a lot of that coming from institutions as well. Before they looked at Bitcoin as a trade, right? They looked at the price like, oh, here's where the price is. I'm going to buy it, just as a trade. Now they're looking more into, okay, so where do I put this in my portfolio? Does it fit within real estate, long-term assets, hard assets, in gold, right? Which clearly, I think, signals a shift in perspective of where Bitcoin is in the cycle, and I think on the adoption scale. So I think the future is very promising to what.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And we have Elon Musk talking about Mars going to the moon and rockets. And that video's a long time ago. And NASA means deceive. And we know he's deceiving the people. And he goes after Apple and Openai when he has the same agenda. And remember, the Crypto Teacher told you. Now we have the Fed Jerome Powell in the House on Wednesday. We know he's not going to cut rates. He's going to stick to the script, data dependent. They want these rates higher for longer. And the Bitcoin ETF, we keep getting inflows. But at the end of the month, we've been getting outflows. If we can keep these inflows, of course, we have an opportunity to get to 90 or 100,000. But if we keep getting these outflows, we won't get there. But these Bitcoin ETFs are taking volatility out of Bitcoin. We've been in the same trading range for a while. Now, these small and medium-sized banks are in trouble. And now they're talking about consolidation. And this was the FDIC plan 10 years ago. I brought it to you. You heard it out the horse's mouth. We're going to see a lot of these small and medium-sized banks fall to the wayside if they don't consolidate. We saw a lot of these credit unions get moved up under these big banks in 2007 and 2008. Those who are in the banking industry understand what I'm talking about. They still kept the name, but they're under the big bank. Remember, guys, the illusion of choice. And in the fourth industrial revolution, you need plenty of liquidity. And Basel III has moved behind the curtain. But these capital requirements are going to crush these small and medium-sized banks along with these high rates. And we know that trickles down to small business. And then we have mass layoffs in 2025 and 2026. We can clearly see it coming. But remember, the NWO causes the problem, wait for the reaction, and run in with the solution. And we have the Apple deal with Openai. And of course, right now they say it's just a choice to start off. But we know they're going to dangle that carrot when they bring the American people to their knees and they need money. We know they're going to take that money and get that eyeball scan for that WorldCoin. And remember, the crypto teacher told you. Now, all we hear about is the AI push from mainstream media. They're letting you know that AI is going to take over the economy. But we know the sheep stay distracted on things that don't matter. The robots, algorithms, and drones have been ready for decades. The only thing the NWO needs is that crisis. So therefore, the people are sitting at home and the machines are taking over the economy. That event is definitely coming around the corner. And remember, it's biblical. And due to interest rates so high, the housing market has been destroyed. But again, the NWO caused the problem, wait for the reaction, and run in with the solution. Those affordable homes, if you can hold out, are going to be here 3 to 5 years from now. When I was growing up, they always pushed the first home you get as a starter home. I think the first home I bought, I was about 20 years old. My grandmother pushed me to buy it, not because I was smart. The fact is I was making good money. Hey, you need to invest. Of course, I listened and it paid off. But unfortunately, the youth are not taught that same lesson because we don't have the elders teaching. They want to go for the most expensive car, the most expensive home. And 60% of them are about to get laid off. And we saw the simulation ran in 2020. The people are going to run to the government. And they already have that solution, that programmable money, telling you what, when, how to buy. And you have 3 to 6 months to spend it, or poof, it's gone. We've seen this movie before. Don't fall for the devil's tricks. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Well, yeah, I am very concerned about concentrations. We do have too much concentration in the banking industry, but it's a very, very top. It's the J.P. Morgan Chases, it's the B of A's, those top four. And actually, J.P. Morgan Chase and B of A are starting to pull away from the other two, Citi and Wells, to provide even more concentration. So that's where regulators should be focused, impeding regional bank M&A. We have a lot of regional banks. It's highly competitive. But they need scale to compete. And if you want a market-driven solution to some of this concentration, you need to let the regional banks get a bit bigger. And also, it's also regional bank M&A is important from a stability standpoint, especially when you get into times of stress. You know, the FDIC and other regulators have proactively worked with banks, weak banks to merge with stronger ones to help stabilize the system. So you're kind of taking that tool out of the kit as well.
I'd argument to say, look at certain other countries that have only a handful of banks. Where should we be?
Yeah. Well, I think the market should drive those solutions, and that we need to charter more banks, too. We need to worry about regulatory complexity. I've been a strong advocate for strong capital regulation, liquidity regulation, as you know, but I think you can do that much more simply and less expensively from an administrative cost standpoint, which is also, impair the ability of banks to start and grow because of these costs, which also benefit the larger banks. So I think that should be market-driven. I think our system of multiple banks is more dynamic, it's more innovative, it's served us better than these other countries where you have highly, huge concentrations and just a handful of large banks. Switzerland, you only got one now.
Right.
So that's a very precarious position for the government to be in. So no, I think it's a good thing to have lots of banks. I think it's been a strength, not a weakness of our system.
Do you think that the prevention, if you will, of more mergers and acquisitions in the banking space is a function of the Treasury Department? Do you think it's a function of the DOJ and FTC? I just interviewed Jonathan Cantor and Lena Khan last week. I mean, you sort of have these competing interests. I could see a Treasury Department saying that maybe we should have more concentration, and I could see Jonathan Cantor or Lena Khan saying maybe not. Yeah.
Well, again, I think it's where you're going to be focused. Broadly, I support the administration's focus on increased, corporate concentrations throughout our economy. And a lot of that's been driven by super low interest rates. So some of the higher interest rates are going to be correcting for a bit of it. But if you are worried about concentrations in banking, and we should be, look at the top. To attack the regional bank M&A is just going to increase the competitive moat around these very, very large institutions we have already. So that's where you should be focusing. Higher capital would be one way to do it for the mega banks. Basel III seems to be bogged down. Look, I think there's going to be substantial revisions before we see what happens there. But if you want to reduce concentrations, focus at the very top, not the regional banking sector. The regional banking sector is not concentrated.
Oh, there's a lot of chatter on M&A. The question is, it's taken a lot longer for the Fed and OCC and FDIC to approve transactions. We're hopeful that it's going to speed up. That would certainly accelerate. I think there is interest in seeing M&A consolidation. Even if investors don't like the deals up front, they tend to like the idea that it creates new opportunities for everyone around them. There's a lot of cost savings that can accrue. So what Sheila's saying makes sense. We just have to have the regulatory agencies kind of abide by a standard of, faster approval process, which has become very slow in the last 2 years.
That ChatGPT/OpenAI partnership is official now. Apple just announcing that ChatGPT from OpenAI will be integrated into iPhone, iPad, and Mac software. This is going to be more of an optional feature, though. So the example they gave is if you ask Siri a question and maybe Siri doesn't totally understand or can't accomplish what you want to accomplish, it may pop up and suggest, hey, do you want to ask ChatGPT? And you can go ahead and do that. In fact, Craig Federighi, who is Apple's head of software, called it the best AI model that's out there right now and the market leader. A few people would probably argue with that other than the folks at Google, et cetera. And by the way, speaking of Google, Craig Federighi also said that they're open to other partnerships as well. So while the initial one's going to be OpenAI and ChatGPT, on top of that, we can expect to see other models, of course, with the approval of Apple and whatever deal they cut. That will be part of it as well. The event is just now wrapping up, Tyler, but just a few other things that are going on that they announced on the AI front. It's largely catching up to what we've seen from competitors, Microsoft and the like. For example, if you're familiar with Microsoft's Copilot product, a lot of what Apple announced is very similar to that. You can ask it questions like, show me all the emails that Tyler has sent me in the last month or so, and it can send you that kind of thing. So nothing groundbreaking there, some image generating things. The key difference here is the privacy angle that they're talking about, Tyler. And we don't hear that so much from competitors on the AI front, but of course, this is Apple. They always make that a feature. They're trying to put as much of the AI on device as they can, meaning servers won't see it. And when they do have to send it to the server for what they call more intelligence, that is done in what they're claiming is a more private way than competitors can already do. So that seems to be the key differentiator here. I'm not seeing too much new that we haven't seen from competitors before.
It's kind of weird. We've spoken a little bit on the show about how different generations obviously look at AI pretty differently. You would anticipate that the youngest workers are the ones who are most open to seeing what's there. What surprised me with some of the things that you all have learned, though, is that most people who are 23 and younger expect that AI is going to drastically change their jobs and in some cases make a lot of what they do obsolete.
That's right, Becky. And so we have been doing a lot of this research. In fact, later today, we're going to release some of the things that we've studied as it relates to the impact and how the perception of AI per generation is really affecting people's roles as they think about charting the course of their futures. What's interesting to me, I mentioned the 5 generations, and that's absolutely the case. That's what we have today. But beyond that, Generation Alpha, if you think about 2010, those that were born in 2010, in fact, I have a 14-year-old at home, and I think about him joining the workforce, which legally, at the age of 14, he will never know work without AI. He will never, in our case, in the HR space, he'll never have to fill out a form for PTO and take a day off manually. All of those things will be facilitated through modern tools, in our case, through things like the ADP mobile app, where he will be able to, through natural language search, just be able to do these things. He'll never know work without AI. So certainly the younger generations, really at some level, whether you're a digital native or perhaps this next generation Alpha becomes an AI native, they will never know work without AI. And certainly the more tenured generations, how they are thinking about their roles going forward is slightly different. But a lot of that research we will be releasing later today. So exciting day.
Well, Kelly, high mortgage rates combined with high home prices and throw in a very little supply of homes for sale, it all has a record share of consumers now down on home buying. 86% of consumers surveyed in May said now is a bad time to buy a home. That according to a monthly survey from Fannie Mae. And it's the highest share in the survey's history, which goes back to 2010. Now, the share of consumers saying it's a good time to sell dropped from 67% to 64%, but that is still a majority.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in an ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books, It's Time to Re-Educate. Also, new to cryptos, Coinbase, Bitrue, Binance, Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.